We're in Monte Carlo for the Rendez-Vous de Septembre. For AM Best TV, I'm Richard Banks. And I'm joined now by Rachel Turk, Chief of Market Performance at Lloyd. Rachel, it's great to see you again. Welcome.
Wonderful to see you.
So it's something of a new era at Lloyd's with some new leadership. Tell us about the messages that you're bringing to Monte Carlo this year.
The main thing we're bringing is that Lloyd's is in this new era of leadership, but a continuation of some of what's been happening before. Very commercial. You come to us, and we'll work out a way to try and help solve whatever problems it may be. I'm not talking about insurance products, but I'm thinking about if you're saying actually with the capital structuring or ways of doing business, come and talk to us, and we'll find commercial ways around the problems.
So we're here in Monte Carlo, I guess, in the second half of the event itself. Have you got a sense as to what the overriding theme is this year?
It's a really interesting one because so certainly from the conversations I've had, it's been much more about a huge amount of capital interest. So from a Lloyd's perspective, capital interest, people wanting to do more at Lloyd's, and then also carriers wanting to set up Lloyd's operations. So that's been fantastic. The odd times when I've talked a bit more about rates and reinsurance and some of the things that you would expect to be happening a bit more around this conference. Little talk about rates, actually, nowhere near as much as sort of last year and the year before. It all feels like it's kind of stable. One of the themes has been, the re-emergence maybe of aggregate cover. I'm not sure I see that happening, but not this year, but we'll see. But it feels like it's been, doesn't feel like it's been a conference where there's been something like a huge amount that's come out that's been groundbreaking.
So in your role as Chief of Market Performance, performance is I guess, the crucial word there. And as we are at this stage of the underwriting cycle, whatever this stage is, maintaining performance is going to be, I guess, the key focus. How do you go about steering that at Lloyd's?
It's a great question. We do a number of elements. So we deliver our quarterly market messages, which is where we're able to sort of lay a viewpoint of what may be happening and what we may be seeing, and maybe some behaviours that we would rather not be seeing, in an effort to sort of stem them before they become sort of systemic. We also, obviously, we do an awful lot from a business planning perspective, looking at plans, continuous performance in oversight. The main thing that you don't see, though, is the action that we always take with syndicates is behind closed doors. So we don't publicise it. So we'll make statements about what we think is happening based on all the aggregated data that we have. But any targeted action is always behind closed doors because it's very unfair to make that public.
Of course. So one of the key words that people talk about when they talk to us, and we have hundreds of people coming through and talking to us, is discipline. And we're going to maintain discipline. Now, of course, if everybody maintained discipline, the market cycle wouldn't turn. How do you keep an eye on that?
Yeah, we look at a number of things. So I think there's been historically in the last few years a complete obsession with rate change. And rate change, fine, but it doesn't tell you the full story. You need the rate adequacy piece and the amount of margin. And so when we're looking at the discipline, when I'm talking about discipline for people in the market, it's making sure that they have an eye on the bottom line and they're not chasing top line growth aspirations. And so therefore thinking about rate adequacy, what does that actually mean? Discipline also means portfolio optimization. It means, potentially leaning into areas where there's still margin. It means pulling back from areas where the margin isn't quite so good. And we can see all of those actions coming through. And for our, some of the top performing syndicates, I can see strong evidence of that right now. And for the ones that aren't quite there with the discipline, they have a slightly harder time because they find that I instill the discipline for them.
So Monte Carlo is a good opportunity for people to get a sense as to the investor appetite for insurance and reinsurance risk. Obviously, Lloyd's has got a broad investor base. Do you have a sense as to a general idea about investor appetite?
It feels quite strong, actually. I've had quite a few conversations over the last few days with capital providers who are all quite keen to deploy their capital. Now, we've got to remember, though, that we've had 2 years of really great return on capital and some years when it's not been quite so strong. So the long-term average is still not going to hit hurdle rates. But I think investors can see that actually might be a good time to come in because actually the trajectory is looking pretty positive from a return on capital perspective. So I think that's great. And then if you take it away from the capital side, from investing in the underwriting balance sheet to investor appetite in terms of M&A activity, I mean that feels like quite a hot topic right now.
Absolutely. So you alluded a little bit earlier to people interested in coming into Lloyd's, and I guess is that presumably from an underwriting perspective as well as this. Well, you've got a variety of ways of coming into Lloyd's now. Tell us a little bit about what you think is going to be most attractive in the future.
So I think there's always going to be the attraction of the traditional sort of syndicate structure to write either a monoline portfolio, which we've seen a few more of those coming in recently, or a more diversified book. And so that being able to sort of access the all of the benefits of Lloyd's, from the licenses, the brand, this shared balance sheet, the AA- credit rating. That's the syndicates are quite keen to take advantage of those, and new entrants looking at that. We've got some of those sort of, I would call them reinsurance captives opportunities. There's obviously the highly publicised one, but there's others in the pipeline of a similar flavour. This is not cookie cutter. These are all bespoke. But the idea of placing a portion of your outwards purchasing into a separately capitalised vehicle with third party capital, that's been quite attractive. That obviously grows Lloyd's share of reinsurance as well. So it's a nice diversifying part for the overall portfolio. And then, we talk quite a lot about that's the risk taking side. And then you've got all the various capital ways of coming in, whether it's a traditional FAL producer. Think of London Bridge 2, that protected cell company structure. That's proving to be quite popular. We've done quite a number of transactions. It's obviously incredibly tax efficient. And so there's lots of different ways now to access Lloyd's. And what we've been doing over the last few years is making sure that there's, access points that suit a multitude of people and appetite. And so therefore there's probably something for everybody in there from a capital and an underwriting perspective.
So again, just to go back to your role in Chief of Market Performance, we've had a lot of people coming through here talking to us about MGAs. And of course, Lloyd's big user of cover holders, but that's something that from a performance perspective, you've really got to keep an eye on. Yes,
you do. And when I think about, how do we do the oversight over that? I mean, I'm overseeing the managing agents, so the underwriting companies really their policies, procedures, etc., for them delegating their authority. We do look at some of the big MGAs from a performance perspective. We do look at the data flows, but some of what we're looking at from a performance with the managing agents is, well, how is it that you're understanding what they've written? Because just to be clear, a bordereau report that arrives 6 months late and that takes you 3 months to figure out, you're just too behind the curve the whole time. And then also trying to push with them, like, where's the alignment of interest? Like, if they're going to get paid fees irrespective of profitability, that doesn't feel like a hugely sustainable model. So it's really just making sure that with what we see, we can, I would describe it as a lot of the Lloyd's role. It's a very much an influencing role. It's like a nudge economics. It's like, this is what we're seeing going on. Like, I can tell you not to do things. It's hard for me to tell you to do things, but I can nudge you in the right direction by maybe making a compelling case based on what we're seeing.
So you see yourself as an influencer. That's
not that kind of an influencer.
Rachel, one final question, if I may. Are there issues that spring to mind to you that are being missed today that are going to be really important in the future?
Yeah, I think the biggest one is probably there's the protection gap, which is, obviously the economic, the difference between the economic loss and the insured loss on Nat Cat, really. But I think there's then the underinsurance gap. And I look at what companies, what risks they have on their risk register, what they've got on their balance sheets, and go, the biggest risks that they're worried about are not the ones that we're insuring and offering insurance for. And so I do really worry with the sort of lack of product innovation that we're seeing, that we risk moving ourselves into irrelevance if we don't start to address those big issues.
Rachel, it's great to have you with us. Thank you very much indeed for your time.
Thank you. Thanks very much.
For AM Best TV, I'm Richard Banks.